Hello everyone, my name is Tolmach and you are on my channel where we talking about crypto. And today I want to discuss Bitcoin and its immediate prospects. Therefore, if you are interested, I ask you to like this video and subscribe to this channel. It's very motivating to create new videos. Let's start. The fall to the levels of 43,000 took place. I already bought crypto at these prices the last time Bitcoin crashed to 42,000 in December. But then it was a V-shaped recovery, but now the situation is completely different. The probability of a further fall has certainly increased, and the indicator of a fear and greed shows us that investors are scared and in a state of fear for quite some time. But are the markets scared enough to keep going up? The state of the highest fear was last recorded in March 2020 at around 8. Now our level is about 23, although just a week ago we dropped to 10. 10 points on the Fear and Greed Index are classified as the strongest fear, and if you look at the history of this index, it becomes clear that after fear, greed always comes, and vice versa. In fact, if you always buy when the markets are fearful and they always sell when the markets are greedy, then this is already an excellent strategy for increasing your deposit. Many newbies who have recently entered the cryptocurrency market and bought Bitcoin at 69,000 now in real panic. They have already lost about 40% of their deposit. Many of them give up and sell their assets at a loss. In this chart we can see that the total number of coins purchased by these investors reached 4 million coins, which is 20% of the total volume of Bitcoin. Once again, for everybody to understand it, 20% of all Bitcoins bought at maximum values are now causing losses to their holders because they are selling them. The reason for this fall were the statements of the Fed. Although for a moment we decided that the reason was in the revolutionary movements in Kazakhstan, it's because 20% of the mining capacities are concentrated there, and in one moment they were without any access to the internet and the hash rate fell but recovered quickly enough. And the real reason is the Fed statements that they plan to start selling assets from their balance sheet, which they bought off during the entire 20th and 21st year. In their opinion, the economy is starting to recover, and in addition to raising the interest rate, reducing purchases on their balance sheet, they will sell assets from their balance. And the assets, they are worth $9 trillion. This could not but affect the markets in a negative way. For the last 2 years they have been printing money and buying assets with it, every month by $120 billion. Now they admit that inflation is out of control and they intend to bring it back under control. We already knew about this and the markets reacted to these statements a long time ago. But on the 5th of January there was a meeting of the Federal Reserve where it was announced what else they were going to do. So the Federal Reserve has begun plans to reduce its own reserves and will begin to implement them after the central bank starts raising the rate. This could happen as early as March or April of this year. This is very big news. Why? Because it could lead to an event called a taper tantrum, a term that means investor turmoil in the markets. Today the markets are very disappointed because they have become very accustomed to huge money printing and economic stimulus over the last 2 years. And now the Fed says that they will not only raise rates but also sell their assets from their balance sheet. And what happens to their balance? Let's look at this chart. Since the start of the pandemic in March 2020, their balance sheet was skyrocketed from 3 trillion to nearly $9 trillion. That's how much money they've pumped into the markets in that time. Now they are going to sell this balance at a rapid pace. Nearly everyone at the Fed meeting agreed that the balance sheet reduction should begin after the first interest rate hike. What does this mean? markets were expecting a rate hike in March or April, but they didn't expect the Fed to start dumping its assets. Usually things went differently. The system first reduces purchases, then raises rates, and then sell their assets. But this time they are going to do everything at once and at a rapid pace, and this is very scary for investors. The US Federal Reserve not only announced 3 rounds of rate hikes this year, but also 3 more next year and 2 more rate hikes as early as 2024, as seen in this chart. This means that the rate should rise to at least 2%. This should have a big impact on the stock market, cryptocurrency, and real estate market, because all 3 of these areas of investments are very much used to the huge pile of money that the Fed was printing and giving away at zero interest. In fact, this is the main reason why the markets beat all records. Bitcoin has grown to $69,000, new real estate has almost doubled in price, the stock market, well, you yourself saw it. The main reason why the Fed did not raise rates in 2020 and 2021 was that they really wanted to fix the situation with the labor markets and unemployment, not paying attention to rise inflation. The latest news tells us that the labor market is close to the maximum employment, which means that the Fed no longer has a reason to keep rates down. Let's show you some more very simple examples that show why the prices in the markets have risen so much in 2021. This chart is a Buffett indicator. This shows the ratio of the stock markets to US GDP. It shows that the market is highly overheated and accounts for 218% of GDP. This means that the market is now more overheated than it was during the dot-com era right here. The value of the American stock giants is also reaching the maximum values of the dot-com times, as we can see on this chart. The largest stock in the US market are much higher than during the 2008 crisis. Even Charles Munger called the stock market crazy, even more crazy than during the dot-com days. So friends, we are witnessing the beginning of a new recession. What to do? The answer is everything is the same as before, to accumulate Bitcoin. Even if now the market starts to fall in the next couple of years, I will continue to accumulate Bitcoin. And the lower this market falls, the more actively I will do it. I will buy every month, regardless of the course. This is the best strategy that has been tested by time. A bear market is a time for asset accumulation. Bull market, time to sell. If this video was interesting or useful for you, subscribe to this channel and like this video. The more likes this video gets, the sooner I will release the next video. I am also very pleased when the video gains likes, so I really feel that I do these videos for a reason. Thanks again for watching, liking and commenting. I wish you a good day and a rich life. See you!